Explore SoFi recent 2.45% decline amid optimistic indicators, a surge in short positions, and market apprehension. Let's delve into details. Welcome to Stock Analysis, your go-to destination for insightful market analysis and investment strategies. If you're ready to navigate the world of stocks with confidence, don't forget to hit that subscribe button. When I talk to you about SoFi today, I want to discuss some current data points to help you understand what actually happened, and you will be informed about everything. Let's get started. So there has been a 2.45% decline in SoFi. Even though many people are aware that their upcoming earnings are expected to be fantastic, with a record number of member growth and various other factors, there will be a focus on the technical aspects in the first part of this week. SoFi technicals are not the best. Despite this, and the optimism surrounding Netflix and its earnings, SoFi dropped by 2.45%. Although it did bounce back from a strong support, which is generally a good thing. I will go into detail on this at the end of today's video. There was another good analysis where all three were very optimistic. You can see a strong buy and another strong buy. Apart from this, shorts are also increasing their positions. In today's shorts, there was an increase of 1.57 million shares, which constitutes 13.98% of the free flow. In total, 125.14 million shares have been shorted. Additionally, when we look at it, the average cost to borrow is 1.12%, which is slightly higher than yesterday. The cost to borrow has not been negative since then. There were a few days when the cost to borrow was minimum and negative, meaning some brokers were paying people to short SoFi, which is quite unusual. I don't know if there is any correlation to this. Above that, there is increased fear in the market despite Netflix earnings and optimism for it. People are skeptical about the GDP release tomorrow because if it's below the forecast, currently at 2% on a quarter-by-quarter basis, it would indicate a slowdown, which is not good news at all. I also listened to Tesla earnings. Tesla, being a significant player in EV and growth stocks, emphasizes the importance of lowering interest rates quickly in 2024, as stated by Elon Musk himself. So once again, there is a lot of fear in the market. The PCE is also set to release on Friday. So on Thursday and Friday, we'll have to heavily rely on these data points to determine whether the market is heading up or down, especially when it comes to options. So it's certain that the market has likely closed by now, but $6.41 million worth of calls have been purchased against 2.52 million inputs in the competition. The sentiment was slightly more balanced, but 45% of all options today were bearish, which were the ones purchased. There was a coincidence that it would be above $8, based on an increase in basis. Looking at the open interest, here's something you should see. At the $8 strike price, there are approximately 24,000. At $8.50, there are 20,000. And at $9, there are also 20,000. Market makers don't want to cover this. Therefore, you'll find a very strong resistance level around $8. So this is something you should consider when looking at the puts that were purchased today. Mostly, they are anticipating it to be below $6 by February. I don't remember if I chose the expiry date for February 9th or maybe February 16th, but I've sold some $6 puts. So if SoFi goes below $6, I can buy some at $6. So it's a pretty good win-win if you ask me. Conversely, if it stays above $6, I get the premium. That's the advantage of trading options. So I provide you with the ability to conduct thorough research on this because it can be very profitable. Let's move on. There are some transactions that have occurred in the secondary market, exceeding $100,000. So you can go and see that a significant amount of money is being invested in SoFi, but not everything is being bought. Basically, I would like to mention that, according to the bid, ask, and selling prices, whatever bid is displayed actually represents a legitimate selling price. This might be influenced by fluctuations in SoFi market. Perhaps there have been some specific concerns related to GDP or SoFi earnings that arose at the last minute. Despite the absence of any significant news causing apprehension about their upcoming earnings, I have closely monitored analyst actions. On Interactive Brokers, according to Elliott Wave Technicals, there is a pivot point at $8.28. If it stays below this point, there is a possibility of it reaching the mid-fives. There hasn't been any notable change in analyst revenue estimates, but there is a slightly higher expectation. The Q4 revenue estimate has increased from around $570 to $571.78 million. I want to highlight the Q4 earnings estimates based on data-driven investing. Approximately 630,000 new members and a new deposit of $2.92 billion in personal loans. If these metrics, which are potentially setting all-time highs, are even remotely accurate, SoFi could have excellent earnings. I believe SoFi should always stay around at least $9, based on its previous offerings, but I won't be providing any financial advice. Today's performance seems to be based on technicals. SoFi trading today ranged from a minimum of 753 to a maximum of 7.94. Throughout the day, it was trading between its pivot and R2. It bounced back from both extreme points. 752 proved to be a strong support that it eventually held. Furthermore, 792 was a robust resistance that prevented SoFi from moving higher. Considering yesterday's less than stellar Tesla earnings and possibly mixed GDP numbers, there is something to ponder. If it goes below this pivot point, it might trade between 728 and 752 on Thursday and Friday. Last Thursday and Friday, it bounced twice from S1, which was helping it move forward. However, if it tests it for the third time, it usually breaks. In the coming days, keep an eye on some very strong support and resistance points. Thanks for joining Stock Analysis. Stay informed with our market insights. Hit subscribe for expert strategies, and let's navigate the stock world together. Happy investing.